For years, consumers have spent like there's no tomorrow, but that may be changing. February saw a surprise drop in consumer credit, signaling households are tapping the brakes. Is this the start of a bigger pullback or just a pause? Today, we'll dig into what's really driving the numbers and stick around until the end. We'll explain why saving and investing more could be the best economic signal we've seen all year.
Gary, let's keep going. Thing number 4, we're talking consumer credit. The use of credit has actually fallen. Are we seeing this as the banks stop lending, or maybe just consumer wisening up a bit? Thing number 4, Gary, consumers tap the brakes, credit falls.
So, Rob, in February, consumer use of credit fell by $0.8 billion. And, that may not seem like a big deal given the fact that consumer credit use is in the neighborhood of $5 trillion. So, $0.8 billion on 5 trillion, it's de minimis, but analysts were expecting a $15.2 billion increase. And instead of getting this healthy increase, they got a decrease. So, in my opinion, this credit contraction is indicating continued signs of caution as more households are beginning to tighten their belts. One of the things that we're seeing are severely deteriorating consumer sentiment levels. Consumers are worried, they're upset, and understandably so. One of the things we've talked about constantly on the show is the fact that the productive private market economy has been in recession for more than a year. More than 100% of GDP growth is coming from government waste and congressional overspending. The people who are actually starting businesses, running businesses, making money, making goods and services, providing goods and services, that part of the economy has been slowing. And so it's understandable that consumers are worried. Certainly all of the press on, the fact that the Trump tariffs are there, or their speculation that the Trump tariffs are going to destroy the economy, that's not helping either. But consumer resilience has begun to slow. And in recent years, spending has been greater than inflation. We have a country that is just trained to spend, right? You're happy, you go spend. You're upset, spend. One of the terms I've hated, I despise this term, Rob, retail therapy. I
Retail
hate that.
therapy. Wow.
I hate
That's
that
a new one.
expression.
I don't think I think my wife uses that one.
Yeah, it's the idea that if you're upset or depressed, or your life isn't going well, go buy things. You'll feel better. I assure you, there is nothing that buying things will, like, if your life needs fixing, buying things won't fix it. Right? You have to address the problem, and spending money does not address the problem. It's not real therapy. I've always hated the expression. But the truth is here, if income growth doesn't continue, consumers have to cut back. And, the one thing that's going to interrupt that is we are going to see an increase in retail sales because there's a lot of pre-tariff buying. People understand that there are going to be tariffs like on automobiles. And so people right now are, walking into automotive dealerships and quickly trying to buy cars before the price goes up to reflect the tariff rate. So we're going to see a pop in that. But I do think it was really interesting that in February, we saw this decrease in consumer use of credit.
Gary, with that, and I brought it up in the intro, does this mean banks have stopped lending, or are we kind of seeing what we talked about in the past? Maybe, hey, consumers are actually just wisening up a bit and doing the right thing, because there are some signs, I think, that are pointing towards that being the case versus the banks just contracting.
Yeah, Rob, I think you have it right. There were people last week who were claiming that the reason for the decreased use of credit was exactly what you said. It was the banks refusing to lend. I don't believe that. And the reason I don't is because, something we talked about, I think it was 2 weeks ago, or actually, sorry, it was like 1 week ago and 2 weeks ago, is that we're seeing American citizens, consumers starting to save more, and increases in investing by retail investors. So basically, what's happening is consumers are saying, I'm concerned about the economy. I don't feel as safe or secure as I did before. I want to save for a rainy day. And so what they're doing is they're saving and investing more. And that's not something that correlates with bank credit contraction, right? If the banks were reducing credit and people needed that credit to buy things, what we would see is declining bank balances, not increasing bank balances. People who need credit and can't get it, their bank balances don't increase. It doesn't make any sense to me. So, again, I don't think the banks deserve blame on this one. If you want to blame them for a bunch of other things, feel free. That's great. You're welcome to do that, but not this one. And the message I want to send out is we again applaud any Americans who are buying less and saving and investing more. This is one of the key things that you have control over. And one of the things that we've talked about a lot are in particular with relation to a lot of young people. People are saying jobs are not available for them, and certainly not ones that will enable them to buy a house. And we've talked about how a lot of them are in a rough circumstance, that it's very difficult for them to buy a house and get married and start a family. And I have sympathy for that, and I think that is hard. But the thing that you do have control over how much you spend, how much you save, how much you invest. And seeing Americans make that shift and take more control of their personal finances, spending less and saving and investing more, I think that's a great trend. I would love to see it continue.
Yeah, I mean, I think it's just even a global shift, Gary, right? And it really starts, I think, with the Bitcoin and the crypto movement, right? Of these individuals just actually finding a platform in which they felt, hey, I actually have a chance. I'm actually potentially not all the way. I'm sure we could talk about it and go down that rabbit hole, right? But okay, a market that at least, all right, wasn't fighting against inflation, wasn't fighting against interest rates, right? Wasn't fighting against the dollar going to zero, right? And seeing their purchasing power just completely get eliminated.
You know what, Rob? I'm going to add one thing to this too, on a personal note. Um, related to that idea that, well, if we spent more, if we had more, we'd be happier. I don't think that's true. And it's certainly not the case for me. I know a lot of people who are practicing minimalism who are really happy. And I know for myself, my normal life, I live in a big home in a really nice part of Connecticut and have a pool. And, it's really comfortable and nice here. And that's terrific. But, I travel a lot, and you'd be amazed. I find places for $30, $40 a night, and I don't necessarily have so much when I'm traveling, and I find that I don't need so much. I'm just as happy or happier, being in a studio or one bedroom, and I just don't need more things to be happy. That's not the thing that makes me happy. And one of the things, we've talked about on the show before is in 9 days, I've made plans to rent out my home for a year, and I'm going to travel, and I will be out in places. Every one of them will be much smaller and less nice than the home I live in. And I expect to have a fantastic time and learn a lot and have amazing experiences and develop inner strength and resilience. And I think these are the things that lead you to happiness. And I know that sounds weird for somebody. Like, I've spent my entire career figuring out how to make money, and I'm very motivated by making money. But, for me, that's how we keep score in this business. Like, the wins are fun because we
Yeah.
won. I don't need to spend more or buy more. I just like winning.
Yeah. Yeah. No, I think it's a great point. And something that I'm seeing actually in the AI space, right, is there's this yearning of people that are buying from a marketing and advertising perspective from things that are actually real, right? Versus the AI component. And I'm going to loop this thought around here in a second. Is I think you're just also seeing it with human nature in general over the last 4 or 5 years, right? Everyone's been stuck at home. They've been working remotely. And so I think you're kind of seeing this renaissance of, hey, there's more to life than being tied to a screen and being manipulated in this market. And so you're seeing this kind of renaissance of, okay, I don't need the American big overbought house, overbought truck, this and that. I'd rather spend that time traveling or going and visiting someone or whatever it may be that's built more around community and authenticity. So that's my kind of roundabout way of getting to it. But like, we're seeing it actually live in action with huge data sets of people we're advertising in front of that are saying, we reject this AI stuff. Actually, we want to buy from brands that are real, from brands that have community, that mean something, that aren't just all about the bottom line, which obviously, you get that big Google, Meta, ChatGPT, AI, NVIDIA, Wizard of Oz, man behind the curtain trying to steal all of our money type of effect, right? So yeah, it's going to be interesting dynamics, going off on a little tangent there, but
No, that's right.
it should be
Rob,
interesting.
a lot of our young people take a huge amount of criticism. They get called a lot of names by older generations, but I think one area where they've made some really good decisions is as a group, they've placed much less emphasis on buying things and a much greater emphasis on having experiences. They're buying less and traveling more. They have fewer possessions, but are going out in the world and doing things in real life. And I think that's terrific. I completely support that. The other thing that I would note is that Americans are happily spoiled from having it really good. And there are so many times I talk to people who they complain about life here and we don't have enough and we have poor people here. And, when you travel the way I do and you see the rest of the world and you travel to these third world countries, what you realize is in many cases, not all of them, but in many cases, being poor in the US means living at a much higher standard of living than the average person in some of these third world countries. And when I go to these places and I talk to them, a lot of these people are happy. They don't the thing that people respond to is change. I was in Vietnam in 1999, 2003, and again earlier this year. And, people there are thrilled right now because their standard of living has gotten so much better. And the standard of living in Vietnam is generally not better than it is here in the United States. It is for some people, but for most of them, it's not. But the change has made them really happy. And so, we tend to get very fixated on, absolute numbers, but it's really the change that makes people happy. And then, the thing that I would add is the thing that makes you really happy is what's inside of you, right? That whether you have a lot of possessions or few possessions, as long as, you have enough to live and, keep yourself from freezing to death, the rest really comes down to your personal mindset and individual resilience. And again, I know that sounds weird from a guy who spends all day thinking of ways to make money, but it's not, one is a profession, the other's a practice.
Yeah, no, I find myself too definitely driven by money and entrepreneurial, but I find myself putting more emphasis and importance on the opposite side, right? Balance is everything. So, all right, let's get rid of the warm and fuzzy feelings, and we're going to move into the heavyweight knockout, drag out fight that we've all been waiting for. Our fifth thing in the double NVIDIA issue, which we're actually going to hit you with the bonus thing today. So stay tuned if you're waiting for the educational thing about stock splits coming here at the end.